Welcome to my channel. Today I want to cover an update on how my portfolio has been doing. So at the year end of 2021, I released a video showing you what the performance was. I want to give you an update. I also want to cover and provide you guys what I've bought this month in January. And before we dive into that, I want to just let you guys know that we've seen some volatility now in January, and overall the markets are on average down about 10%. Depending on the Dow, the Nasdaq, the S&P, they vary, but we'll say about 10%. So that brings us into correction territory. It looks like the market now on the 28th is kind of, turning around a little bit. Have we hit a bottom? I don't know, but it's possible. And what I can say here is we have some positives and negatives, right? We have a lot of companies that have been, giving great earnings reports, i.e., Microsoft, Apple, Tesla. But yet we have this whole, inflation hanging over our heads, the increasing of interest rates. And so I think people are just kind of at a crossroads and confused on what to do. And so I think we've had this kind of hidden stock market crash. I think a lot of the small caps have crashed, where a lot of the big quality large cap companies have stayed pretty sturdy and have dipped maybe 5% or something like that. And so you look at Microsoft, you look at Apple, they're doing very well overall compared to smaller companies like Tattooed Chef, Teladoc, Robinhood. Robinhood's been a mess. I'm glad I did not invest in that company. I know some people that invested when it was near, you know, $70, and now it's down to like 10, 11 bucks. I think even 9. It's crazy. So I think you have two sides to the market. The large quality companies that are kind of holding steady, keeping the market up and not really reflecting what's really going on with all these other companies. And you have these small caps that have, fallen 50+% up to 80% in their stock prices. And so I think there's kind of like this hidden market crash going on. And so what I want to share with you is my portfolio, because what I do is I invest in quality companies and I'm diversified across the stock market. And so I think that's insurance, right? I'm buying insurance for my portfolio. So let's see how it does. Let's see if it actually helped protected me against, all this volatility now in January. I think it was one of the worst Januaries in the history of the stock market, by the way. And so let's see how I did. So if we look at what I reported at year end of 2021, I was up 23.29% and I made a gain of $6,210 so far. At the end of January, we're not including the 31st, so at January 28th, my portfolio has now fallen and it's up, its percentage of growth is now 16% instead of that 23.29%. And I went from $6,210, now I'm up 4,583. So I've lost about $1,600. I'm down about 7 percentage points. And so I think overall that reflects a win, because if I was down 15, 20, 30%, I think that would be something where I'd have to reevaluate what I'm doing with my portfolio. Why am I dropping so heavily? But what this tells me and confirms for me is that I'm invested in quality companies that, when I first invested in them and as I continue to research them, I continue to have the conviction that these are good companies with great future growth. And that's what investors are seeing, and that's what's helping, I think, keep my portfolio from really dropping or going into the red. So I'm up 16%, which is still awesome. It's not the 23.29% at the end of the year, but I think it will, eventually pop back up once the market turns around. And we might have hit a bottom, we might have not, but regardless, I am still going to invest regularly in quality companies. And so I think my portfolio reflects that by only dropping about 7% instead of the massive 10 plus percent other portfolios have probably seen. Of course, I'm not a stock genius. I just really try to focus on these quality companies. So let's now reveal what I've bought in January. The first stock that I bought that I couldn't resist was Facebook. Now, Facebook to me, it has a PE of 21, which is extremely low for a company like this. They have one of the best balance sheets in the world for a company. And this company has one of the largest user bases out there. They do have the largest user base out of any social media platform, um, but they have a lot of cash flow. They have, as many with as many users as they have. I think they could take so much leverage and advantage of that and really, if they ever start do hurting, they can really turn that around quickly. Um, they're also, with their future growth, what I see is the metaverse, right? I know a lot of people are kind of wary about that, and maybe that's why the stock has been held down, as well as all this scrutiny that's going on with regulators saying that they, kind of manage information in a way that they shouldn't. But regardless, I think that whole scrutiny will blow over eventually, and the real focus will be on the metaverse. Is this something that's really going to grow or not? I think it is. That's what I'm betting on with Facebook right now. As soon as they announced it, I went in on Facebook, and I'm continuing to buy shares because with a 21 PE, with you know their excellent balance sheet, this company, I think, is positioning themselves for the future. The metaverse, I see more and more about it every week. There's many companies. I think Nadella, the CEO of Microsoft, said by the end of 2023, a lot of companies are going to be utilizing the metaverse for their business. People can, get onboarded in the metaverse. They can work from home and go to meetings in the metaverse. I saw a video where they say you can choose to go to the beach to attend a meeting or get an office environment. It's up to you. And they have these little circles uh, where you go inside of it in the metaverse, and that ensures that nobody else can hear you. Of course, people make comments saying, "Well, but Facebook can hear you." But what they're saying is nobody can come and interfere with your conversations if you're within that circle. So they show, a beach with a chair and an umbrella and a circle around it, and as long as you're in there having a conversation, it's private. So again, I think there's a lot to learn. It's just interesting, and I see more and more. Of course, they sold their Oculus goggles like crazy, and so many of my friends have it. So I like to see how it affects my circle. Almost everybody I know has Facebook or Instagram. A lot of people now have the Oculuses. So Facebook is everywhere around me, and I think this company has a bright future whether you like them or not. And I think what's keeping them down right now is people are just a little bit cautious on where this metaverse is going. But I think it's going to be a big deal. I think with gaming, with the office environment, with just your personal life, I think it's going to be something that will be a lot bigger than it is today. And I think Facebook will have a big chunk of that market share. So that's my thesis on Facebook and why I'm bullish. Next, I bought and could not resist another share of Microsoft. Of course, this company is, almost 13% of my portfolio right now. But, with a quality company like this, they came out with excellent earnings this week. They have a huge moat. They just have a great balance sheet. They're just a great company that I think for, the next 5, 10, 20, 30 years, you'll just look back and each, 5 years, you'll be glad you invested in some Microsoft. So on any kind of dip, I'm going to buy some Microsoft. And so that's what I did. This company is also getting into the metaverse. They're growing their subscriptions, they're growing their cloud-based business. They're just really doing a fantastic job, and this is the definition of a quality company. You go look at their financials, you're going to see nothing but impressive numbers. And so with Microsoft, it's just one that I'm okay with it being a little bit on the high end of my portfolio allocation because I know eventually I can rebalance if needed. But right now, I just see it as a buying opportunity. You may think it's overpriced, but I think it's undervalued. I think this company is one of the more boring companies that people just don't really focus on too much. It's known that Microsoft is a good company, but I think people try to take their risks other places. And so I think Microsoft will just continue to grow. And I'm just very excited about this one. Long term, this is my probably the best company that I own if I had to pick. So that's one that I bought. Next, I bought 3M. This company pays a very good dividend. I think it's 3.63%, almost $6 per share. So I really like this company for the dividend, but I also like it because I think, 3M has a lot, well, they do have tons of products out there. I mean, you go to Home Depot or any home home improvement store, you're going to see 3M products. There are probably 3M products in your home that you don't even realize. And so I think with this dip today, they had there was an announcement that they were hit with a $110 million lawsuit with their earplugs, but that's really a drop in the bucket of what this company brings in revenue. And so I think it's just an overreaction. People get emotional. They like to react to things. So I think because it was announced, the stock went down, and I didn't see a big deal with it. So I went in there and bought a share. And I'll buy again maybe at the end of next week if this company falls down into the 150s. I bought in the mid 160s. So it's a company that I'm happy having. I think, their products are quality and you find them everywhere and they're needed for a variety of things. And so it's just a company that I think has a good moat, has a growth path. It might not be a high growth company, but then the dividend kind of makes up for that, in my opinion. So 3M is one that I bought. Next, I bought some Vici. This is an experiential real estate company. They own a lot of the properties that casinos like Caesar's Palace sits on. They are going to be acquiring MGM growth properties. They have properties and casinos and golf courses around the whole United States. The CEO even mentioned the word global, so we'll see in the future. But, I think this stock is kind of hurting because of the Omicron variant. I think because with the increase in inflation and interest rates, people worry that people won't have that money really to go out there and spend as much as they have. But I think Vegas is Vegas, and that will be, the one place people won't stop going, no matter what their change in their income is. I think that's always a destination. I see so many people. Of course, I'm in Albuquerque, so it's not that far from Vegas, but people are going to Vegas all the time. And so I just think that when it comes to experiential, uh, you know, REITs, Vici is the top of the list because when it comes to Vegas, that's not something you can replicate. And their dividend right now is about 5%. So that's very impressive. So I just really like Vici and I will keep adding to this company probably every paycheck, whether it's 1 or 5 shares, it doesn't matter. Because I think in 10 years, this company will be one that you'll look back on and be like, wow, I wish I had the opportunity in 2021 and 2022 to really load up on this company. So that's my thesis on Vici. Lastly, I bought Tattooed Chef. Now, as I mentioned, a lot of the small cap companies have taken a nosedive. Tattooed Chef has. It's not one of the worst ones though, but I'm down 30%. So it's fallen 30%. So I had to pick up some shares. My average is about in the $16 range. It's fallen down to 11 or $10 per share. What I think about Tattooed Chef is this is a company where nothing has changed for me. And so I think with the drop in price, it's just extremely undervalued, extremely cheap. And so I'm going to pick up shares. That's what I do, right? I have a long term vision for this company. I think the plant based food industry is just going to grow over the next decade or two. And I think with Tattooed Chef, we just see them expanding their SKUs and their products every couple months. You see more and more of it. And now I see them in Target. Finally, started to see them in Sprouts. And a lot of the grocery stores I go to, you're seeing them. So their presence is there. They acquired a few companies last year. So I think that they'll have expansion into, snacks and energy, protein, nutritional bars, things like that. There's also some, underlying news down in, underground that they're going to be releasing some new burritos and pizzas soon. So this is just a company that is expanding. It is growing. It's vertically integrated, which I love that business model. And so I think with people having, the short, sighted view of things, especially with these small caps diving so much, a lot of people are selling out. And it's like, why are you selling out when these companies are going and diving down so low? You should never sell at the bottom, right? If Tattooed Chef, went up 50% from my cost basis, maybe that's an opportunity to trim some position of it. But if it's down, why would I sell at a loss, right? It's never a loss unless if you sell at a loss. So that's just my opinion on Tattooed Chef. I think this company has a bright future. They are new, they are growing. So I look at this company a little bit more carefully than other companies because I think there's always a chance that these small companies can have something come in and really hurt them. But so far, I'm impressed with everything they've been doing. So I'm very happy. I eat their products. I have some in my freezer all the time because they're just good. I'm trying to increase my vegetable intake and reduce my meat intake. I still love meat. I'll always eat it, but I think it's healthy to kind of, make those changes. So there's what I bought this month. There's my portfolio performance in January compared to year end of 2021. So the difference is it's gone down about 7%, which I am very pleased with. I think it's held up very well for one of the worst Januaries in the history of the stock market. So I'm very pleased, and I think that's just testament to having quality companies and having a diverse portfolio. So now I'd like to ask what you guys bought in January. How are your portfolios doing? And do you agree with the purchases that I made? Do you disagree? Do you think my portfolio, is doing well, or maybe it's not? I'd love to hear your opinion, so please comment below. Also, please subscribe to my channel. I provide a different, knowledgeable opinion, and it's good just to get that, right? I'm sharing my portfolio, my journey, and I follow about a good 5 or 6 others because it's good to have, people that are bringing forth different investments, different strategies. It's just going to expand your knowledge. So it's free to subscribe. So why not? So thank you guys for joining today. I'll, put up another video soon, but I thought this one was important to put out there. Be transparent, keep being transparent. I'll try to do portfolio updates once a month. And so have a great day, and we'll see you soon on Mark's Finance and Fitness.